Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Okay, I'm sorry if this is once again a bit of a long commentary. There is a whole lot to discuss here, but I'll try and consolidate it where possible. Okay, so the same basic drivers are still here at work that have been driving this market now for many months. The key pattern drivers are the middle time, they're pushing it higher, currently 17,440, and the upper time currently 20,935 of the huge yet shallowly bullish 2017 to 2018 bullish shift pitchfork. The upper time had been significant back in September, capping the market, and again in October, though it was assisted that time when it was breached. The next pattern is the October 2020 to March 2021 bullish shift pitchfork, notably the lower time currently 18,275 and the middle time currently 20,585. These tines have shown the more recent bullish angle of attack, especially the lower time as support when working with the slowly rising long moving average currently 18,305. I appreciate many are obscured by labels, but please believe me, these will become clear should the market approach any of them. I'd like to remind you now once again something I originally said some 16 weeks ago, and I quote, "Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it is missing." End of quote. These are the core drivers of the market. Now to more recent action. Looking at the September action, a number of key features pop out. To start with, the high and low of September, which resulted in a monthly key reversal up for the month, also helped draw a newer bullish shift pitchfork for the April to September move. Now this pitchfork has already seen action, with the middle time currently at 19,845, most recently acting as a dynamic resistance and over recent weeks as an attractor to the market. Earlier in October, the upper time, currently 21,465, worked with that old upper time of the 2017-2018 bullish shift pitchfork, capping the move up at the time. Now, I said 4 weeks ago it is all getting very, very interesting now. This was and still is because of a key piece of action. You see, while September was a large monthly key reversal down, October was an even bigger immediate countering monthly key reversal up. Let that sink in for a moment. Next, I'd like to discuss the latest addition to the mix. I revealed this 2 weeks ago, to look at the whole action from late June to date as a really huge, really big diamond pattern. Now, I admit it's a little lopsided to the top right, but I hope you can see what I'm talking about. Now, diamond patterns can be tops, bottoms, or continuation patterns. This one can only be either a top or a bullish continuation pattern. So, the diamond has a lower uptrend trend line currently at 18,515 and the upper downtrend trend line currently at 21,035. For the moment, I'll continue paying close attention to these two key trend lines as well as the previously mentioned pitchfork tines. For your guidance, this diamond reaches an apex at the end of January next year. These are the current forces at play here in what is in reality a very confined space despite ostensibly and superficially wide ranges. Plus all this has happened and is happening in a relatively short period of time. This past week has seen a move up to the previously mentioned middle time that is acting as an attractor. But when prices tried up over the September 2014 high at 19,940 and the June 2014 high at 19,995, they were battered down by a daily key reversal yesterday, the key reversal down. This isn't a change into a bear flag for the mid-October today action, at least not yet. Rather, it's to keep the market sensors around the middle time attractor. But just in case, below we have the flatlining short medium moving average currently at 19,385 and perhaps more formidably slowly rising the medium moving average currently 19,195. LME 3-month zinc. Prices had been travelling down the far side of the mountain for about 3 weeks. Then early last week the market started to slow the descent, prompted by a hammer pattern 2 Fridays ago, which in turn had been prompted by the prices reaching the support of the old May 2020 to date optimised uptrend currently at 32.85 and the rising short medium moving average, currently 32.15. This optimized uptrend had shown the bullish angle of attack for many months prior, until it stopped working in early October due to the market shooting up. Additionally, and a little below, we have the rising medium moving average, currently 31.07, which, at the rate it is moving higher, may still impact the market by the end of November. This now prompts a bigger question, one that I have outlined 2 weeks ago. Whether the recent action, specifically the mid-August today action, is a bump and run reversal top. Now I've drawn a bump and run reversal top trend line currently at 30.34. You can see that on the chart, just in case. And the reason I mention the medium moving average is the bump and run reversal top trend line lies in between the medium moving average overhead and the rising long moving average below. That's currently at 29.95. It is also in the midst of the congestion support from May to September between 28.53 to 30.92, but it's working its way up and out of that, and we may well then see how strong these two moving averages and this trend line really are when that happens. This past week, after the bullish hammer from 2 weeks ago, has seen some indecision based around the May 2020 to date broken uptrend attractor. That was until yesterday, when we had a combined bearish engulfing pattern and a bearish open and close black Mariposa that closed right on the short medium moving average. Now I half expected a follow-on lower today, which sort of did happen, but it seems the attraction of the broken uptrend and perhaps the influence of the short medium moving average have managed for now to recover what otherwise may have been a first test down of the medium moving average since September. I still suspect the pressure is on to move lower, but I suspect it is only reasonable to see some dithering before a serious commitment. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.